Everyone, welcome back to another winning characteristics video featuring Ray from TraderLion. And today we're going to be going over one of the greatest stocks of 2020, a really interesting case study, Pinterest, going back all the way to its IPO, all the way up to the recent price action after its most recent earnings gap up. So to start things off, I thought we'd talk a little bit about the fundamentals. The focus of this series really is on the technicals, but Pinterest had a lot of what we look for at TraderLion. In terms of standout quarterly earnings, you can see after that earnings gap up, which we'll definitely discuss, earnings were up 999%, sales up over 50%, margins strong as well. And the estimates, Ray, if you could point that out, for 2021 were up over 100%. So in terms of fundamentals, it was spectacular. Obviously, this is an up and coming social media company. That group overall was strong. Snapchat as well was leading in 2020. And of course, we've got the increasing fund ownership and looks like 5 high quality funds. So in terms of fundamentals, it ticks all the boxes really for me. And then it's up to kind of the technicals and if the chart matches that thesis and finding a place where we can manage risk along the way. So that's really the focus of this video, the technicals. Once we've got the fundamentals sorted out, how do we position in a high potential stock like Pinterest? So Ray, I guess welcome back. And why don't we start from the IPO days and really analyze it granularly.
Just to cover a little bit more about the fundamental, one of the things that I look for on the bottom of MarketSmith is basically the 58% going to the 76% to 78. So that's increasing sales, and then they have the blowout EPS,
right,
which is triple digits. So that's sort of a recipe that sort of drives. Price is driven based on fundamentals at times, and then the market trend itself. So increasing sales, increasing EPS, and then basically comparing that to June, right? Or any other quarter back on pins, we don't see such numbers. So that really ticks all the fundamental boxes here.
Right.
So starting with the chart for pins on its IPO day. So what I'll be going through is basically the journey of the stock, how it trades, the different characteristics that we see, how it moves up and down, and how we could avoid some of the landmine action here, whereas maybe we could trade some of the action that's constructive as the stock goes on its journey. So one of the first things that I see on this is basically the IPO week is really powerful. Whenever I see that, this is a stock you want to keep track of, especially given the volume on its IPO week being 80 million. That basically tells you, it's a liquid name trading a lot of shares, and then on IPO, during the IPO week, it's basically put in all blue bars with pretty decent volume.
Right.
This sort of action doesn't really give you an entry area to trade it unless you're a fundamental trader and you have the story behind it, or whatever the case might be, or some sort of different edge to get you in here. But in terms of price, given the level of experience that you have, most traders would just watch this go and watch this come back right back to the IPO day. Me personally, I get this question a lot, is do you trade on day one? I don't. I haven't found any sort of edge in trading on that day one or even day two. I like to see the price either build out an IPO base that I can, I have decent information from a price and volume perspective and how it's acting in weak markets to make a sound decision. But for me, this whole run, I would just be watching and seeing, does it consolidate at some point so that I could enter this stock. So as we move on, pins basically rallies really well, and then it pulls back. There really is no entry area. The stock, the ranges are still fairly wide. This is probably the widest percentage gain from its IPO day. So some traders, if they're active and they have an edge in this area, would use that to sell the stock, right? So that's something to keep track of. Every time you get a largest percentage gain, either from its base or, just this crazy action, you always want to take some off the table, especially, given whatever your goal is in the markets. is to not, the only goal is to not fall in love with the story. The goal is to make progress day to day, and then flip your edge again and again in the market so that your equity curve reflects your, you being in winning stocks. So going back here, there's really nothing to trade in this action. Some traders, this is really the first time it zips up from the $23 mark to the $28.95 mark. Again, this initial action is always followed by consolidation on winning stocks, and we see some of that consolidation here, but it's still fairly wide and loose. And then the first time that I really see it tighten up is sort of in this area. So by the time the stock is trading here, what we're seeing is, on multiple time frames, which is basically your 10, 21, 50, and your 65 comes into play, is that the average closing price on all these frames is basically right in that 27 area. So that tells you, at this point, the stock is going to make some sort of decision. It's going to either pick a direction up or pick a direction down. It's sort of tightened up to a point where on a 10-day closing average closing basis, 21-day average closing basis, 65-day average closing basis, it has that similar closing price, right? So that's also indicative of a stock going basically sideways for a very long, or not a very long, but for a minimum of 65 days. So,
and looking down at the volume there's a nice pocket pivot volume signature right after that bunch up in the moving averages. So that presents a pretty good, very advanced entry there as it retakes all those key moving averages on higher volume. But again, it doesn't really tighten up after retaking the moving averages before earnings. It doesn't really give you a chance, if you're looking for a nice clean consolidation pivot, to get in before that significant event.
Right. So one of the things that I've sort of picked up recently is trade a stock like it doesn't have earnings coming up, and then when it does have earnings coming up, you decide the day of the, if you just act like there is nothing coming out, and sort of just stick to price action and volume. And when it is time to make that decision, make that decision. What I saw, when I started out, I would always get caught up in, earnings are next Tuesday, or earnings are in 11 days. But those 11 days, if on the charts you get an edge within those 11 days and you build up a cushion of 11 to 12%, then why not, right?
Right.
So I sort of leave that decision to be made. When it has earnings, I'll decide that, the night of. If it's reporting after hours, then I'll decide, right before the market closes, so on and so forth. But the other thing that I quickly want to cover here is this is really the first time it would show up. If it's not on my IPO list, which it should be at this point, right? If it isn't, then when I'm scanning the markets for, tight areas or areas where I could define my risk, it would really show up right here, right? So your process and the scans that you do, they all matter on if you're going to catch a winner. So do you have a scan in place that allows you to sort of see stocks that have been going like this for a minimum of 50 to 65 days, right? So if you don't, you probably want to build yourself that sort of scan so that you can at least go through that scan and find, this is really optimal risk at this point. Because if it breaks out, you could really place your risk really tight. Maybe it works a few days, doesn't build you enough cushion, you get out. You did a fairly small trade before you run into earnings, you probably don't have enough cushion and you move on.
Right.
So the next thing that I want to cover on this is reports earnings. It's not the highest volume since its IPO. It's sort of cut off over here. So this is the biggest one since its IPO. But what's important here is price gaps up, and we see a closing range of less than 50%. So when a stock is reporting earnings, and this is basically institutional volume on the charts, you want to see a high closing range on that day, when as we go through the life cycle of this stock, we will see that it does put in a high closing range when it really wants to go. So this is really when stocks gap up and they don't put in a high closing range. I'm not convinced at that point. Either I need some sort of evidence after the fact that it, really tightens up, or there is some sort of, the very next day it just goes in the wick and out, right? That's a different story. But on this particular chart, we just see chop back and forth. Now, one of the positives, and this is another question that's asked a lot, is, the market was down and it was outperforming the markets, right? Then why, me and you talk about RS all the time. So now RS doesn't work, right? That's sort of the takeaway at this point. But you still have to keep it in context. Yes, it was showing RS at this point, but the thing is the action was still fairly wide. That's one. If you're not convinced on that, the other thing is, by the time the market starts rallying and you don't see the stock that you were tracking, right? The stock that was showing RS and it's showing up on your, RS list, and you're keeping those, and it's not. At this point, this stock is supposed to be going up or be the first one out, right? To sort of lead out of there. And if it's not doing that, it's not doing that. That's it. So this strength is negated by this weakness. That's it. Like maybe you have 2-3 pluses, and then the days that the market was going up, it's not going. You're back at square zero at that point, right?
Right.
Your strength was negated by your weakness. There's no point sitting there saying it was showing RS, so I'm going to continue holding it. Even if you were holding it, again, you got to have your sell rules, which is basically 1 close, 2 close. At a maximum, if you position it even in this area, which doesn't even look proper, you should have kicked yourself out. Basically, 33 entry to about $30 exit. So you still hurt yourself. Yep. Go ahead.
Yeah, you just said 2 closes. So just to clarify, those are 2 closes below key moving average. Is that what you're saying?
Yeah, two closes below a key moving average, because especially if you don't have the way I trade, if I enter the 33 area and I get busted with the market moving up, something's changed about the stock, I'm out, right? I'll cut that flat, maybe 1%, maybe 2%. And I won't argue with what the price action is saying in the moment, even though we have some evidence of RS in this area.
And that's right? above your cost basis. As the stock pulls back to your cost basis, you're protecting that cost at all costs.
Yeah, exactly. So if something's changed, your expectation, right? And then we talk about expectation. This is breaking your expectation. And if it's breaking it, there's no reason to argue with it. Right. So once it does that, so less than 50% closing range, which is sort of the first flag. It's still a little bit wide and loose. And just to drive the point home, in the recent market action, we saw exactly this sort of RS line in a weaker market in apps. We saw this in DKNG as well. Yeah. Right? Where they exhibited strength, like they were trying to fight the market. So Z was another one. But the action on each of them was like up and down, right? So it's hard to still define risks. So just because they're showing RS doesn't make them a leader. You still need more. So institutions show up on the chart when the price action goes from this to this, right? When it really wants to get going, it will put in that 1 to 2% ranges for several days to a week before it zips out. So you just want to see that on the charts. So maybe go back, look at these exact same thing. They were sort of roughed up, right? They were trying to resist the market pressure, but then eventually they caved in. So moving on, we get 2 closes below our KMAs. Even if you're positioned, you get hurt, you don't fight it. At this point, when you're below your KMAs, this is a fairly clean break, right? Yeah. Test of the 50, maybe, when you're testing the 50, you should have no buy rules at this point. It's already undercut the gap low. That's another thing, right? When it undercuts a gap low, that's another thing. There's no route, you want to see how it acts off the 50. Doesn't even do that. There's a complete slice of that 50. Price breaks down and we're sort of, this is just dead, right? From a price action volume point of view. So the next thing we could pick up is at this, and which is likely another earnings cycle. And Richard, if you want to cover that briefly.
Yeah, sure. So here we've got a gap down. So that's obviously a big negative. But we do have a pretty strong closing range on that day. And that close becomes important. That becomes basically a pivot point for me. I learned this from George Kachuk, the US investing champion money manager division of 2020. And he views any high volume close as a pivot point because institutions were likely involved on that day. And they basically pin the price at the close at that specific level. So going forward, we want to see it respect that level, and anything below that is kind of, we want to ignore it. It can base, it can do whatever. But once it gets back above that level, that's when we become an interest again. And here we've got a strong move up the right side on volume, potentially tradable, that breakout through there. But again, it looks like it makes a strong move, then it tightens up a little bit, does have a gap down there, a little bit messy. Moving averages now back below price, but then it looks like once again we have another earnings gap up, and this time the closing range is very poor. That I think that's basically the bottom of the day. And high volume gap up with a poor closing range, it looks like institutions there are distributing stock. So our expectation from that close is that we continue downward, and that's what happens. We basically continue to drift downward, slice through the KMAs again, and this time we're brought down by the market. If you look over at the top, right? Yeah, if you could move that. Yeah.
So a few things happen here. So we gap up, right? We gap up and we reverse, and it's on volume again, less than 50% closing range. That's a negative, right? It's almost as if pins knew that this was coming.
Yeah.
Right. So there's something about it. So this time, whatever it is, it doesn't matter. Market goes into correction and it sort of really kills it at this
Just
point. Right? This is
bleeds and bleeds. Yeah.
Right. So it's a complete reset. By the time we're in correction, which was Feb 24 at this point, we're in correction. There's nothing to do. Maybe it's showing RS for a day or two off of its 50, but you still need it to set up or tighten up or do something that's going to interest you, right? So this is what you want to avoid. This is a fairly interesting concept that Richard mentioned. It's sort of like a neckline, right? Above it, we could start looking at it. Below it, don't touch it. So moving on, there's really nothing to cover. Once we're below KMAs, there's nothing to do. So you should be just waiting and waiting and waiting, right? What is it doing? So really the first time it starts to get interesting again is when we reclaim the key moving averages. And sort of the first spot that I see is stock rallies from 10 to 20, right? That's a double. That's okay. If you miss all of this, completely fine. Depending on your style of trading, the only goal is to be consistent. It's not to pick a stock that will double off the bottom and give you basically emotional stress. The first time I really see is maybe this area. Again, the KMAs, just like we saw back in there, they start to bunch up, right? Still not the best, because at this point, honestly, when we got our follow through day, right, there were so many better, looking stocks that you wouldn't pick up pins at that point unless you were just I don't know why you knew the
story or something like that. You knew the fundamentals,
right? So if you saw some sort of, if you had some sort of other edge, maybe you did that. But from a price action volume RS point of view, it didn't really fit the bill whatsoever. So we'll just keep moving on. So at this point, so this would be an area of interest, right? If there was nothing else that was really sticking out to me in the markets, it was sort of this area would make my scans again, given the fact that on a 21, 23, 65 day basis, the stock is sort of put in an average close of in and around $19, right?
Right.
So that sort of tells me now at this point, again, it's going to make a decision. It's either going to do this or it's either going to do this, right? Then you start collecting evidence. If it does get on your watch list, is markets in an uptrend? How is the RS looking? How's the volume looking? Me personally, if I didn't have, if I didn't have any other stock but pins, then I would really force it at this point, but I still don't see the quality of the setup and how, remembering how strong this trend was, I just don't see myself trading it in that area. Is there anything you want to cover there, Richard?
Yeah, we were talking before we press record that right before the earnings, you were seeing a lot of interesting options activity. Did you want to mention that? Just going into earnings?
So in this area, two things caught my eye on pins. Was one, that it made my scan here, right? Sort of makes my universe at that point. I'll start tracking it. But the second was, there's a lot of options activity right in this area, and then right in this area. And there's a lot of talk of, funds adding, and then we have the whole Kathy thing where Kathy was adding. And then we sort of see that price confirmation post earnings.
Right.
So a few things caught my eye in this area, but it was just the quality, folks that look at the options market. That's one of the edges that I look at, was fairly active. And then the other thing that I see on here is the fact that it was respecting the $20 mark, right? Sort of a whole number mark. It sort of says something about, about the action being fairly controlled on the stock. It also, there were a few down days in here for the markets, but it was sort of outperforming the markets, right? So the market at this point, if we draw a line, the RS at this point, we draw a line, it was outperforming, right? So there is some sort of footprint in this area, because there are a few RS days. So we had RS days, IOF market, which is the institutional options flow market, was active. And then the institutional block trade market was really active in this area, which was really just institutions, which was really confirmed on this gap, because we saw 110 million. And then now we really get into, institutions were active, RS days, KMAs were bunched up at this point. You still have, a chance that, now it might be a really big winner at this point, because when you see it gap up, whatever percentage this was, that really hits home that, there was some sort of evidence that was collected here that sort of says that this might do something like this in the future, right?
Right.
So one of the main things, this closing range was less than 50%, just to drive the point home. This closing range was greater than 50%, with this sort of 110 million volume, highest volume in over a year, clearly, right? And the close was very high on the closing range, and the institutions weren't shy. We want stock. Simple. Right. Like the message was sent. Now at that point, there's two things you could do. You could feel sorry that you didn't buy here, which is one thing that a lot of traders do. But what experienced traders do is, now they see this as an opportunity, because the market's showing risk appetite, right? They're basically, they're excited that they're not sorry that they missed this part, right? That they're excited for what's to come. Is a pins that gaps up like this, is it gonna, consolidate and then move up and out? That's really the, where the rubber meets the road. They can define risk during that consolidation and really trade that trend with conviction at that point. So we'll move on to see what happened. So the price of pins basically starts consolidating and frustrating traders.
Yep, chopping around for quite a while there.
Yeah, so this gapped up basically, and then at this point, it's time to build a base and frustrate a lot of people, right? One of the things that, again, that becomes really clear is when a market goes down and this thing's holding up well, that's evidence that institutions, we saw similar evidence in this area, right? Market down, RS up, RS up. So now we have this footprint on the charts, which is the highest volume in over a year with a high closing range. Now you're just building your case at this point. If the market is going to go with this sort of volume, it's really hard for pins not to go, right? And this is based on, if you study historical winners. So if the market goes into an uptrend, especially in this pressure area, which is really important, these are the days you do your homework. These are the days when you're really making your money in the markets. This is when you're sitting, right? So it keeps holding up. Again, high closing ranges, high closing ranges, high closing ranges. There's some sort of respect here on a whole for $30s, right? So the way I would be positioned, basically what I was doing in this area was I was buying stock, given the fact that there was RS, in anticipation of this standard pivot that everybody's watching, which is 39.64.
And did you get shaken out a few times? You had to redo your position?
Yeah, so I did a lot of buy sell versus the 21 day in this area, right? So if it was up on the day, I would buy some stock and then it would reverse on me, protect my cost basis. But the really sweet spot on this was when it started respecting 35 here. This is when I really took note of it. That the fact that in this particular area, if you after watching this video, you could really zoom into this area, is the market was moving down and it kept holding 35, right? And I kept, like, when I'm keeping track of names, I kept saying, pins is still above 35. The market just made a lower low. Pins is still above 35. What's going on? So that really, makes me, that's when that my conviction was really high. And then there was IOF in this area. So the institutional options flow market was active in this area. So I had a really good case that was building. There's a big volume, greater than 50% range, IOF market active. Now I have RS days to go with it. I can't ask for much more at this point other than define my risk and let the trade play out, right? So my average cost basis, I think in this one, was in the 35s eventually after I did a little bit of trading in this area, but then really built conviction at this point because the RS line was rising and all of this evidence. And then it just really took off. At that point, you're managing the trade, right? So one of the other things, if your cost basis is in this area, even if it isn't, right? Even if you're still waiting on this 39.46, it breaks out, resets, and then reclaims. You'll see this a lot. I mean, if it breaks out, it reverses on you, you get your cost and then it reverses back. You have to keep all the evidence in mind, right? Even though you might have got, basically cut up into pieces if you bought strength and then it reversed on you, right? But then you build a lot of sourness about about pins. I can never make money on pins. It keeps reversing on me. I've lost money on it before, but it's doing everything that winners do, right? So if you want to own a winner, you have to buy it back. That's it. Because you have to go with what the market is telling you. You can't just be, don't be a sore loser because the chart's telling you a different story. So you have to stick to what the chart's telling you, even if it takes you a few paper cuts, right? You have to take those. That's just how the market goes. Breakout, retest, retest, and then breakout again. Maybe you buy it back here and it starts sticking, right? At that point, you make what you lost and then some in the market. So we'll keep scrolling to the right.
And I'll add something for those people who don't necessarily buy on pullbacks to even numbers like Ray does. There's a nice consolidation pivot at 37.90, I believe, that forms right below the breakout that we were just talking about. So that would have been a pretty good entry into strength if that's your preferred way to buy, where you can manage your risk versus the low of that consolidation. And I don't know if you even take any heat on that. It does reverse, obviously, right near all-time highs, but it finds support right again at that
there's
pivot.
There's no heat on that because it's 37.90 and then retests 38.06, holds 37.90, and that's sort of like that. looks like the Minervini cheat thing, right?
Yeah, there's
A
definitely
little
some.
bit.
Yeah, definitely.
Yeah. So yeah, that's another like really sweet spot. Me, yeah, that really drives the point home. And then you sort of see this rally. That's it, right? And then you see this rally and you build a cushion into earnings. So something you own from 35 to 38 closes at about 48, right? At that point, you have enough cushion to hold through this bar, right? Price gaps up. Now, again, this is where it gets a little bit iffy. Price closes less than the 50% range, right? You sort of have to still let depending on your average price again. If your average price is like, if you bought this day, then you get burned, you get kicked out right away, right? But if your average price is in this area, it's much easier to sit, wait, see, watch what happens.
And at this point, Ray, are you waiting now for 2 closes below the 23 EMA? How are you managing your position?
Yeah. So given how the market was and my portfolio progress that was being made, right? And I remember this day clearly was pins was the only reason I was green on that day. So it, I sort of, held a stock. I wanted to see what it does. And then my eyes were basically initially on this 2320, this confluence of 23 DMA and 23 EMA, where I'll allow it to come back. I want to see, my mindset was once a stock sort of gets above the 50, right? $50 mark, not the 50 DMA, the $50 mark. I'll let it play out. I want to see what it does, right? Because
but that should hold. That level should hold.
Yeah, that level should hold, and the fact that the KMAs were coming right up above that level, I was like, I wasn't interested in picking this or whatever. I was gonna let it play out because I know there's a lot of evidence here, right? Here, in this area, there was evidence. So there's a lot of backing. See it plays out. Market trend in terms of everything else, it was a little bit iffy on this day because I remember that clearly, but things overall were still not that bad versus what this candle was showing. Again, if you were to initiate a position on this day, you shouldn't be because the closing range is less than 50%. It's closing at the lows of the day, and the volume on this candle is higher than this candle. So that sort of mounts the evidence. And unless you're positioned in this area or even this area, that's a different story if you're positioning on this area. So you view it from a different lens depending on your average price, right?
Right.
So I sort of let it work, and it worked out for me for a little bit. So we'll keep moving on. This sort of lingers in your mind, right? The fact that this volume was higher than this volume, and then it closed less than 50% range. That's not the most ideal thing to be doing. And I think the market was weak on this day, which I made a note of, but still that's not an excuse. If you had stellar earnings, you had really good, sales, EPS, the institutions want the stock. They won't look for an excuse. They won't sit there and say, the market is bad today, I'll buy tomorrow. They'll position in it, and that will show like it showed on this particular day. So at basically, so at this point, you're managing the position. There really is no new entry area, right? There's no, at least from my point of view, I don't see much that is tradable properly. Right. Or enough evidence at this point to say that this closing range, again, which is less than 50%, there's not enough evidence on the chart to sort of be initiating a position on it. So unless your position, if I didn't own any stock from here, right? Let's just hypothetically say I did not trade it. I would not be trading any of this. I would wait. I would look at better stocks that sort of give me the evidence or build a better case for me, and then build a better risk reward for me to sort of position in them. So at this point, I was basically managing the position. Fairly exciting for me is when the 50 DMA moved above the $50 mark. Right now, it's like even the 50 DMA is rising, which sort of I look at that as some sort of guarantee, even though there's no guarantees in the market, as what if and when it reverses, I'll get out at 50. If and when it reverses, I'll get out at 55, right? So I'm looking at it from that point of view, or at least how I manage my positions day to day.
And I thought that was a cool psychological trick, that you're not counting your profits with every single tick and day moving up and down. You're focused on the moving averages, which are going to take you out. You're not counting your chickens before they hatch, you know?
Yeah. So like you have to look at it from your sell rule point of view, right? Because that's your exit rules. If you're my exit, there's no exit rule for me here at this point, or there's no exit rule for me at this point, unless I'm like competition trading. That's completely different, where you just sell in the middle of nowhere, you buy in the middle of somewhere else and just compound. That's just a completely different thing. But you have to look at it from a sell rule point of view. Basically.
You're giving it the market is right, so you're giving the position which you have nice profits on the benefit of the doubt, and you're letting it work as long as it obeys your sell rules. That's what you're doing.
Yeah, exactly. So we'll briefly cover what happened at this point. So the 50 DMA basically catches up, and then we start seeing a bunching up of the moving averages, right? We sort of had a slight bunch up here where the 50 was pretty far, but the short-term moving averages, which is your 10, 21, and 23 bunched up, which caused the price to sort of to pick a direction and go. Now we're starting to see that bunch up again, where the 50 is starting to push up right into. So this is where things get a little bit tricky, right? Now, from my sell rule point of view, I'm looking at 2 closes below the 50, sort of test the 50 at this point, and it rallies. That's okay. It tests the 50 at this point, and sort of, now it breaks down. Now what, right? So that's where it's important to sort of have rules that will get you out, and you sort of don't, second question yourself.
And Ray, as it was approaching new highs on kind of low volume, did that kind of get too tight for too long? It was just kind of drifting higher. Is that something you take into account?
I mean, the way I'm managing the position, I'll sort of let it play out, because I don't want to time the markets, right? I don't know what's going to happen. Like sometimes, if we go back and if you look at a chart of net, it did this exact same thing where it would drift lower, up on volume. It's not really within a base. It's not really within anything. It's just trading, right? There's no consolidation. There's no nothing. And then net, what it did was it put in a huge bar, which basically broke out, and then it sort of consolidated again and then traded up and out of that. So I don't want to place myself in a position where, especially when I have enough cushion on from this point, I just don't let it play out. If it wants to do this, great. If it wants to do this, then I just have rules in place on the bottom side that will kick me out anyways, right?
But if you did have a position, that's not really a spot you'd be looking for an entry. Is that right?
No, I would there. The entry spot that I see is maybe, so price rallies up, and then look, price rallies up and then we get sideways action, right? So if I'm not positioned, then I want to collect my evidence in this area to see what's going on. So I'll get really granular to see, markets moving up. It sort of flatlines the RS. It's not really doing much. I'll check the IOF market. I'll check the IBT, like what's going on, what's the story, collect some evidence, build some conviction. And then if it wants to, I will trade it above that 72 mark if it wants to go. If it doesn't, maybe I buy that 72, reverses on me, get out at my cost or 1 to 2% below my cost, right? Take a few paper cuts if I have that evidence behind me, I'll take a few paper cuts and do that. If I don't, at that point, it just, I just don't see why I would trade it in this area, to be honest.
Yeah, it looks a little strange for sure. Okay, so taking a step back, or did you want to say something?
No, I mean, you bring up a valid point, but the fact that price is allowed to move up as long as the volume is greater than prior day on the right side of anything. But this is nothing. this is just nothing.
Mm-hmm.
There's like a breakout attempt. As soon as you attempt a breakout, which is above this 68.93, even if you want to call it a consolidation, it doesn't really look like anything. It's just
Right.
there's nothing proper about it. It's in the middle of nowhere is how I would describe that.
Right. So taking a step back, since you have your cost basis from down in the near the 35s, how are you managing the position now that it's testing the 50-day and actually test the 65 EMA? How are you managing that position?
So basically, I mean, at this point, when we test the 50-day, right, price responds positively. So I
Mm-hmm.
take that as a positive, right? And then it tests the 50-day, price responds positively. Now it breaks the 50-day. At this point, I have to make a decision where am I gonna see how it responds to 65? Um, in terms of what my cost be. This is a double at this point. Not a double, but yeah, it's almost near a double at this point, right?
Right.
95, 96%. So I'll see. I mean, in this particular scenario, what I did was I let it I started looking at it from a 65 EMA point of view, and that decision was likely based on how my portfolio was acting, right?
Mm-hmm.
If my portfolio is acting well and I have this winner and I'm not feeling that much pressure, um, I'll revert back to the 65 EMA. But if it did this, right, I would get out at this point. I would get out, but fortunately, what it did was it just put in another weird rally where
Mm-hmm.
there's really no buy point here or no proper buy point to stock. So one of the important points here, when it rallies straight up off the bottom, and you have some sort of pivot that you're watching, right? 75, 76, what have you. You have to be prepared for this stuff. So even if you buy it at this point, and the volume is, it doesn't have to be high on the right side. As long as through the consolidation, maybe it picks up a little bit. Again, this is not really a base. There's just nothing.
Mm-hmm.
Goes to new highs, does a little, whatever. Even if you get in at this point, make sure you protect your cost basis because what you're trading is not proper.
Mm-hmm.
You have to differentiate what you're doing, your actions in the market, and your position size should be lower at this point. Your convictions should be lower at this point. So everything that you're doing at this point should be very either small size if you're building a new position, or as you add to a position as it makes progress, you should be adding less and less as you get, away from your cost basis or do more adds to the stock that you own. So back to the point. So I ended up holding on this. Depends on many different criterias, portfolio pressure, what the market's doing, what everything around it. What is it doing? Do I give it a chance to close it below 65? What I settled on just so happens it rallies. Now at this point, um, it really gets iffy. So when it gets iffy is basically when the 50 DMA catches up to the moving averages and everything's all sort of, jumbled up
Mm-hmm.
or sort of running into each other at this point, right? We got this particular day, which I remember really clearly, was everything gapped down significantly but closed really positively. This was a fairly large red flag for me
Mm-hmm.
across my portfolio. I did not like this action because this is not indicative of healthy action in the markets. And this was really the day after this day, we haven't really been the same, right? Even today, which is what, April 29, April 30.
30th, I think.
Yeah, the
Yeah.
action just has not been the same even though we closed positively on this day, the range on this bar, you can't find a similar range anywhere in this area.
Yeah.
It's just something's changed. Stocks when they want to go up are supported really well, regardless of what the market condition is. It does not matter. When you see this like 70 to 86 action in a single day for what you consider to be somewhat of a leadership stock, that's a huge red flag that this is not supported anymore or not supported properly, right? Whatever the news might be, it's allowed to gap down maybe 3-4%. That's okay, even 5%. But this $70 to $82 mark in a single session, that's a big flag. It's also the biggest range percentage wise. So this was a huge flag. I became really cautious at this point, and then basically what kicked me out was one close, two close, and this day cut stock, move on. That's it. End of story.
So even though it was an up day, that day kind of put you on your guard because
the way I viewed that particular day was not a positive. And I remember it really clearly because I was looking for precedents. Like I couldn't find a recent precedent where every single stock in the market had a 20% range. Like every leadership stock, like the ranges got really wide, and there was really no reason for that, right? So that at that point, if it did a 70 to 82, tightens up, and then it acts like completely nothing happened, and then we start building evidence again, that's a different story, right? And then we start sort of moving up. Okay, then in hindsight, you could use that word. It shook everyone out, but this is not a shook everyone out. This is like there's a disaster coming. Prepare for it. It's across the whole market. There's a lack of support on this day, and the environment's completely changed from that day. Even go back, look at your journals. The environment has changed. Nothing's been the same since that Feb 22 mark or whatever this date is. So, yeah. So at this point, I mean, I was really cautious, still watching. Cautious optimism, really, right, would be the right word.
Yeah.
Sort of jumping in and out. Then it flushes, and I was like, okay, no, this is this particular day, largest range, right? Something's not right. The whole market was sort of weird on this day. Things get weird. Stick to your sell rules. Don't second guess it. I don't care if it does this after that, right? I'll figure it out. Like I'm too busy following what's made me money in the past to sort of be scared that it's going to go up without me, right? That's like when you're at year 1 to year 8 in your trading, that's not what you feel like. That's just natural. But when you lose enough money, you don't feel that anymore. If it goes, it goes. Let it go. I'll trade my edge. I'll trade my sell rules again and again and again, and I'll let it do. If it just rallies and it does a 60 to a 80 in a single day, and it's outside my rules, I don't care. It doesn't matter to me. So at that point, the stock basically kicks me out. The very next day, you're like, oh my God, I sold a stock and it's way lower. You sort of, those emotions are normal because you're sort of watching what you sold. But at that point, there's no entry. There's nothing to do. So what I'll cover recently, I mean, at this point, I was again, one of the things that I do track when pins, given that it's a growth story, right, gets in a base. Typical bases should be about 30% from the high, 30-ish, right? Maybe even 35%. Normal correction, and that's a normal correction in growth stocks. So even though my sell rules kick me out, I'll sort of keep the depth. I'll sort of track the depth, because when things get really when markets go in a correction, growth is allowed to correct 30 to 35%, and in some cases 40%. It's allowed to do that. So I'll sort of keep track of the base, the depth of the base, just to make sure that if it wants to set up down the line, I could trade, basically trade it again. Because what this is doing is, this was weird action. This is just, I don't know what the heck this is. There's no consolidation. There's no base pivot. There's nothing. It's a big nothing in this area. It's trying to get into that base building mode again, so that it could get its mojo back. So that this is one of the things you should be doing if you're a growth trader tracking names with triple digit earning sales. You have to expect this sort of volatility in them, And then dependent on your goal in the markets and your sell rules and all those things, make sure you track the depth. If this is about 30%, we calculated that before the video. One of the recent trades that I did, which was fairly advanced, has nothing to do with price action volume, which was more database, was the fact that price was holding 65 and I saw this close up, up and up, sort of gave me conviction. It was trying to pick up some RS days in this area. So I just happened to buy some stock and then it was 22% in like 6 days. Again, that was flushed out and pretty quickly get kicked out because it's basically a database buy. It doesn't really do anything. And then if we go to the current action, yeah, I mean, it's this little tight area. There's some database conviction, rallies, basically kicks you out, says get out, and then gaps down on earnings. So it's as of this date, at April 30th, it's still within this larger base formation now. So you draw your line at 90 and you draw your line at 60, right? So it could do whatever the heck it wants in this area, but I would sort of get concerned if it's going below. You see the 200 days coming up, right? See if it wants to tag the 200 and do something, but this is all base building now. So we're in a larger base. Not sure what MarketSmith says, but yeah, we're basically base building. We'll see what happens. First thing you want to look for, if we want to talk about the future, is KMAs are going to come down, right? Price is going to rally. And then at some point, all the KMAs that are coming down, price is going to rally above, and then they'll start looping up right underneath price. It will just form a really tight area, maybe in the 80 mark, 85 mark. Now, don't take my word for it. I'm just saying what could happen in the future is 80, maybe consolidates and then builds a really nice pivot at 80. Then you could start building your position 85, and then you build your proper base position at 90. And then depending on market conditions, things might go to 100, test that Livermore 100, who knows?
But as of right now, there's been a recent downside reversal. Then it just kind of leaked that one day, and then we have a gap down earnings. So as of right now, it's kind of guilty until it proves itself once again. Yeah. Although it is holding 65, I think before we start recording, that was a positive for you.
Yeah, I mean, so two levels that I would be watching. So one of the first things is the base depth, right? Is pretty decent. It's pretty normal for a growth stock to be doing this.
Yeah.
So you have to keep that in mind. How do you know this? You study winners, you go back to different growth cycles and you see how much do they correct, right? Sort of come up that number yourself. And then now it's holding at 65 post earnings. We have the volume this earnings cycle on the gap down wasn't that high relative to what we had here and here, right? Maybe that's a slight positive. Again, if you're new to the markets, you see these colored lines. If you're below these, just leave it.
Right.
Just leave it. Let it do what it wants to do. It will set up a sweet spot like this one. And it might chew back in and say, now I'm done base building and you could buy me back.
Right.
So, but you just have to be patient with that and sort of let it convince you, build that, let it, the evidence builds, and then you build your convictions and you position in the name, and you keep doing that again and again.
Absolutely. All right. So to summarize, I guess what we talked about, do you want to go back to kind of a longer term view of the stock and list those winning characteristics that we look out for, just so we can summarize it all in one block?
So what we covered in this video was the IPO week was pretty good. The volume was pretty good on the IPO week. Really, me personally, I don't really have any price volume action edge, so I'll wait. The first really entry area that we discussed was this where the KMAs bunched up. Maybe, act like there are no earnings until you have to make that decision. I think that was one of the keys. In this video. Price gaps up less than 50% closing range. That's a red flag. If institutions are accumulating stock, they're not shy about it. So when they're shy about it, it's sort of iffy. price was showing RS while the market was under pressure, but then when the market moved out, price was not confirming this sort of action. That was another red flag. Kicks you, even if you're positioned, you take a paper cut, goes below the KMAs, doesn't really do anything. That's the the neckline concept. It sort of, again, it was below the neckline for the most part. Sort of got above it. Action here was still pretty wide. Gaps up, right? Gaps up. Market goes under pressure, basically runs into the market. You don't want to run into the market.
Yeah.
This is what happens when you run into the market, basically 30 to 10. Again, in this area, KMAs start punching up, right? Sort of some sort of interest in this name at this point. There's a lot of IOF, IBT, Cathy, whatever you want to call it, in this area, but price really confirms that this was the highest volume ever, right? So that's whenever a stock puts in this sort of day, highest volume ever, gap up greater than 50%. Now you have a recipe. You have 120 million shares, which wasn't institutions. And then now you had some evidence in this area already, depending on how you trade. So now you're basically saying, where am I going to enter this stock? Where am I going to enter the stock? We discussed this entry area, right? That little pivot within that, it was holding the KMAs, price sort of goes up. And then we get this iffy area where price was higher. This was again the highest volume, but the range was less than 50% closing range.
Right.
At this point, if you aren't positioned in this area, I don't really know what all of this is. The way I trade, or the way I've taught myself to trade, is there's really nothing to do here because it's not a proper setup, right?
Right.
So make sure you define what's proper and what's not proper based on historical winners, and not what your opinion is on a particular stock. At the moment, what we're doing, again, sell rules trigger at this point, 2 closes below the 50 DMA, right? Sort of kicks you out. This largest range, the largest daily range, probably through this entire run up, is a huge flag that the stock is not properly being supported, and has sort of never been the same. Now we're base building from $90 to $60. We'll see how this plays out. If a stock is below the KMAs, 99% of the traders that are trying to achieve consistency should just stay out of it. Let it sort of rally up, let the KMAs bunch up, curl up, consolidate, find your pivots when it does that, so on and so forth.
All right, Ray, I think that's a perfect summary. And it's actually good timing because at TraderLion, we just released our first course on exactly what we're talking about in this video, leadership blueprints, which are winning characteristics that we look for in every chart that we analyze. And if you want to check it out, the link will be down below in the description. And you can learn more about it on that page. But thanks for tuning in. If you enjoyed it, please go ahead and leave a like down below. If you have any questions or comments, let us know down below in the comment section, as well as reaching out to us on Twitter. My links, as well as Ray's and TraderLion's, will be down there as well. But other than that, thanks again for watching, and we'll see you guys in future videos.